With the US election right around the corner, I thought this would be the perfect opportunity to take a look at some of the areas of the market that may do well post-election. If this is your first time here, my name's Nick from Ways to Wealth, and you're tuning in to week 42 of the market recap. This is where we highlight key events that happen in the market over the past week. So I'd like to ask you a huge favor. If you learned something new, if you get some value out of this video, smash the like button. It definitely helps me out. And if you enjoy the video, if you'd like to come back, make sure to subscribe. We do this every single week. All right, let's dive in. What a roller coaster of a time we are having leading up to this election. Not only are we dealing with the possibility of a Donald Trump re-election, but we're also dealing with the year 2020. It's like, what else can this year throw at us? But with that being said, we have looked in the past couple months at what each party win would do to the markets. If you haven't seen those videos, I would definitely suggest checking them out. We covered a few months back what a Biden win would do. Would they crash the markets? We also took a look a couple weeks ago if the markets would be trumped if Donald Trump were to win the election coming up on November the 2nd. So if you haven't seen those videos, I'll throw the link descriptions up above and down below. So make sure to check those out. If you have been keeping an eye on the US election polls, it has become more and more apparent that Joe Biden will likely be the next US president. Most have the Democratic Party up around 53 to 54% in the popular vote. They also have them pegged at around 270 to 290 electoral college votes. So that's obviously 270 is enough to win. But we all know in the past that polls aren't the most accurate. Sorry, Hillary. But let's take this as being true. So we'll take it at the fact that the Democratic Party is going to win. And we'll take a look at what sectors this will benefit the most moving into this stock pickers market. First off, let's take a look at the ever so popular topic of stimulus and the unlikelihood that Nancy Pelosi and Donald Trump will reach an agreement prior to the election. Now, the Democrats have proposed a $2.2 trillion stimulus package, and the Republicans have proposed a 1.6 on the other side, and there's been a little bit of a stalemate going on. But post-election, if a Democratic sweep were to come to fruition, meaning that the Democrats control both the House and the Senate, this $2.2 trillion stimulus package will pass through with ease, and this will further increase the Fed's already inflated balance sheet. Okay, and that means that it will lead investors into gold. And I've covered this topic, whether you should invest in gold, in another video. I'll throw that link up here and down below in the description. As the Fed prints more money, it will decrease the value of a US dollar, and this in turn should drive investors to look at gold because it is a store of value. And there's a few ways that you can play this, but the most conservative way to do so is an ETF that tracks the price of an ounce of gold. And a few examples for you are IAU or GLD. If you're on the Canadian side of things, CGL would be something to look into. And if you look at both IAU and GLD, they're both up around 24% year to date from the printing that has already occurred. Another way to play gold is to invest directly into the miners. So we saw something this year that we have never seen before, something unimaginable in Warren Buffett's 13F filing, and he made his first purchase in a gold company. He bought 21 million shares of Barrick Gold, ticker symbol GOLD. It trades on the New York Stock Exchange, and this was previously an asset class in which Buffett refused to touch. Many decades have gone by, and he said that the asset's inability to produce anything was something that made it uninvestable. But obviously now the times have changed. This time it's different. and he's made his first purchase. So if we take a look at the year-to-date chart, we can see that it is up 48% year-to-date. And obviously, if we take a look at just the price of announced, the ETFs that track that, in comparison to the miners, you see the difference in risk. There's also ETFs out there that would combine a bunch of miners together to take away some of that risk of owning just one company. But obviously, that is the difference between a more conservative play and a more riskier play. If you want to take it one step further, silver is something that is super leveraged, and it doubles approximately with gold. I wouldn't suggest it to somebody that is not risk averse, but it's something to take a look at and see if it fits your portfolio. The second sector that has the most to gain is a cross between two ideas. The first idea being Biden's Build Back Better plan, where he mentions that he wants to build a modern infrastructure between roads to bridges to schools. And this was also a strategy from the playbook of the government coming out of the 08-09 Great Recession, where the government funded many infrastructure plays to obviously help create jobs and get the economy back on track. There are a few different ways that you can invest in the infrastructure play, much like we saw on the gold side of things. So first off, let's look at some individual names that are set to benefit. And the first one is Vulcan Materials. This ticker is VMC, and they sell asphalt mix and concrete. So they're going to benefit for the infrastructure rebuilds in the roads and in the bridges. The next one that we have is Marietta Materials. And that ticker symbol is MLM, and they provide heavy building materials, and that would play the construction side of things. The last one that we have is AECOM, and this one is very similar to a Canadian company, Aecon, and they deal with the engineering and the construction side of things. I personally own Aecon on the Toronto Stock Exchange. I bought this in March when the prices fell back. And I was playing it based on the infrastructure play coming out of this recession. That ticker symbol is ARE.TO for the Canadian, ACON for ACOM. That is ACM, that trades on the New York Stock Exchange. But those are a few individual names to look at adding to your portfolio to benefit from the infrastructure side of things. Another more conservative way to play this is obviously through an ETF. You can play an infrastructure ETF like IFRA. It's an iShares product. It trades on the US Stock Exchange, but when you deep dive into the holdings of the company, there's a lot of utility and energy names in there, which is not a pure play on infrastructure in my opinion. And I think a better way to play this is through a base metals ETF. One, for example, is one that trades on the Toronto Stock Exchange. It's XBM, and it has holdings like Rio Tinto and Southern Copper. So you're actually playing the metals that are going to be used in building up the infrastructure. So check that one out. Let me know if there's a US comparison down below. And this is a better way, I think, other than an infrastructure ETF, is to actually dig down and look for the metals. There is no secret that a huge part of Biden's plan moving forward will be a new green world, with obviously climate change being an extremely important topic right now. The focus should be on clean energy companies. And this was a trend that has already been in motion, but obviously will be accelerated with this trend. And we've already seen that green investments have been outpacing oil energies, even dating back to as far as October last year. Some individual names that you can look further into in this sector would be a company called Next Era Energy. It trades under the ticker symbol NEE, and this company is the most innovative company when it comes to the renewable energy space. They generate more capacity from solar and wind power than all other companies in the space combined. Another play would be Brookfield Renewable Partners. This company gives both Canadian and US investors a chance to get into this trend. They trade both on the Canadian and US exchange. And Brookfield has an international portfolio of these power generating facilities, so it gives you a little bit of diversification throughout the world. There are also ETFs that you can play in this space. For example, ICLN. This is an ETF that's provided by iShares, and it covers the clean energy space. And you can take a look online and Google all of the different offerings that the US has on the renewable energy ETFs. But unfortunately, on the Canadian side, we don't have any of these products yet. But one company that I will suggest for you to check out is a company that I own personally, and it's called Greenlane Renewables. It trades on the TSX Venture Exchange, and what they do is they separate carbon dioxide from biomethane gas. And they do this from landfills, from farms, and they take that gas and they move it back into the natural gas system. And that's something that they've signed a contract for in California, $21 million over the summertime. So it's a company that has been around for a long time, but is growing. So I would definitely suggest taking a peek and doing some more research on that one. Before investing in any of these companies, I definitely suggest that you do your own due diligence. This video's purpose is to just give you an idea of what a Biden win may look like in certain sectors, and definitely not to be taken as financial advice. And that's all this week for the market recap. I hope you enjoyed the video. We covered what a Biden win may look like for gold, for infrastructure, and last but not least for clean energy. So if you got some value out of the video, do me a huge favor. Hit the like button. It helps my channel out. It helps it spread to people like you who enjoyed it. And if you definitely made it this far, don't forget to hit the subscribe button. Turn the notification bell on. We do this every single week. I hope you all have a great week on the markets. Happy trading.